Joe, I want to start with you here about this idea that strategy, MicroStrategy, formerly known as MicroStrategy, now Strategy, has gotten so much attention for its Bitcoin corporate treasury playbook that other companies started to do the same. And now you're seeing companies do that with Ether as well, including Sharplink Gaming, which you are chairman of. What is the difference between using an Ether corporate treasury strategy versus Bitcoin?
Well, Michael Saylor's done a brilliant job with his particular implementation of the strategy. Being able to do some of the same things and many other things using Ether is actually much more powerful because Ether is a productive and yielding asset. So we've been accumulating capital in various ways every single day. We've been instantly turning it into Ether and instantly staking it or restaking it, and we'll take advantage of decentralized finance yielding capabilities. And so we're able to take our Ether and grow it directly. And we believe that we'll be able to accumulate more Ether per fully diluted share much faster than any other Ethereum-based project, or certainly faster than the Bitcoin-based projects.
And it's not just Sharplink Gaming. You've got BitMine, Immersion, BitDigital. All of these companies have been accumulating Ether in July. When you are accumulating Ether, is this something where you do it steadily as time goes on, or are there pockets of periods where you are going in to increase your holdings and other times when you're sitting back?
Well, we're doing our best to accumulate capital every single day through ATM facilities as well as using other mechanisms. We're earning yield every day on our existing Ether, and nearly every day we're buying more Ether and staking it immediately.
I am curious, Joe, about the leverage nature of this play, particularly as we've already seen, at least publicly with Strategy, but with some of the newer entrants into this. How much does leverage come into play? And I am curious as to whether there is any sort of downside hedge that you have to take as a result.
Yeah, so currently we're not levered at all. We are considering offering convertibles, which will involve some leverage. And no matter what we do, we're going to keep leverage very much in check. We'll have a pretty low risk profile. We believe that decentralization is going to grow dramatically over time, and that will result in extreme appreciation of Ether and Bitcoin and some other tokens, and so the only thing that we need to do is to remain prudent with respect to risk levels, and our shareholders will benefit.
I am curious as to your thoughts on the adoption of Bitcoin relative to Ether. And I understand Bitcoin obviously arrived, 5-6 years prior to Ether. We're a couple days away from the 10-year anniversary of the first launch. I am curious as to why we didn't see a little bit more of an embrace, particularly in those first few years, relative to what we saw in Bitcoin. What was the primary difference?
Yeah, so Bitcoin's value proposition is now. It has been really clear that Bitcoin is important, similarly to how gold is important when currencies around the world are debasing. Ethereum's future has always been ahead of us, but it's becoming increasingly clear that Ethereum's future is now. As our friend Tom Lee said, the next Bitcoin is Ether and Ethereum, and what he means by that is that financial institutions and enterprises and the markets in general are recognizing that the nature of trust as embodied in these decentralized trust protocols is changing. We can bring decentralized trust to transactions, to processes, to agreements, to relationships. And by doing that, and that's especially poignant on Ethereum because you can bring programs to Ethereum and enable people to participate directly in using those programs. Every time you use Ether on this new kind of software, this trustware that is Ethereum, you're able to run processes or transactions that benefit from guaranteed execution, verifiability, the ability to set up agreements that are automatically enforceable very easily and inexpensively. And so we believe that this new kind of trust, where Ether is the highest grade trust commodity, is going to enable the economy to grow much larger and much more rapidly.
Joe, what is your confidence that the SEC under this administration has a clear digital asset policy? And I ask because, of course, we saw the SEC last week greenlight the Bitwise 10 crypto index fund conversion to an ETF, and then later on reverse course completely and say that it's putting it an indefinite stay on it.
Yeah, so I think the SEC is very clearly supportive of decentralized protocol technology. Hester Peirce has been a great advocate, very thoughtful. She may say something about certain kinds of approaches as a warning, for instance, in terms of tokenizing public equities. But that, whenever she says something, it's well thought through and makes sense. Paul Atkins has said very positive things about the direction of our technology. And so I understand that there were technicalities in those particular situations and not uncertainty really on the part of the SEC.
I am curious, Joe, about just the ecosystem, the crypto ecosystem from an industry perspective in terms of hiring, in terms of staffing levels. There's been a lot of discussion about how, despite the record run that we've seen, at least in Bitcoin and some of the other assets, despite the regulatory loosening, if you will, since Trump has taken office, that we haven't necessarily seen that translate for a lot of companies into actual profitability, into actual growth in their actually underlying businesses.
Well, I think there are some very profitable businesses in the Ethereum ecosystem. There are some very profitable protocols in the Ethereum ecosystem. The Ether token is doing quite well after languishing for a little while. And that's simply because Ethereum is currently scalable enough, affordable enough, usable enough. It's now legal to use and build on blockchain in the United States of America, where we had serious headwinds, regulatory headwinds under the previous SEC. Profitability in our ecosystem is about to be rampant.